Hi everyone, this is David from EUVC and I'm super excited to bring you something special. It's EUVC Live from SuperVenture. SuperVenture is the place to be if you're serious about VC in Europe. We're talking about hundreds of LPs, VCs, fund managers, all hanging out in Berlin, connecting, debating, and yes, having quite some fun along the way with all the side events. But for this limited series, I did catch up with some incredible people, folks shaping the future of European tech, debating if anyone actually has an edge in venture, and tackling hot topics like defense tech, secondaries, ESG. And trust me, things go real. Sometimes funny, sometimes provocative, but always insightful. We'll hear from people like Andre from Backed, who threw parties with acrobats. Seriously. Matthew from Barclays, who gave us the lowdown on why defense tech isn't just about bullets and bombs. Joe from Isomer reminded us that you can't buy a beer with paper gains. Bjorn from the EIF brings some surprising optimism on European exits. And Jan from HV Capital, reminding us all how humbling the VC game really is. So if you want to get inside the conversations happening right at the heart of Europe's venture community, hit subscribe, stay tuned, and get ready. Because EUVC Live from SuperVenture is starting.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
My name is Jan Miczaika. I'm a partner at HV Capital.
Jan, here we are, SuperVenture 2025. Thank you for joining us. Tell us a bit about, your Berlin base that we were just talking about. So this is probably a quick commute for you, but still, why do you attend SuperVenture, and what are you hoping to get out of this week?
So I'm fascinated, to be honest, and this is not marketing, about SuperVenture and Super Return, because Berlin is my hometown, but then, it's a deeply, in a way, liberal, radical, left-wing city, and you have this congregation of everyone in capitalism comes here. I can't remember what the number was, like 2,000 LPs, GPs, etc. And so for us, as one of Europe's largest funds, it's an opportunity to reconnect on the one hand with our LPs, maybe new and existing ones, but then also, of course, GPs from other funds and founders and everything. So it's a pretty wild week for us.
Yeah. Why don't we do it? I was wondering if we should or not, but let's just have you give us a quick rundown of HV. I think most people know it in the industry, but in case someone doesn't, what is HV Capital?
No, happy to, of course. We've been around since 25 years, and we're currently investing out of our 9th fund generation, which is a combined 800 million fund, about 400 million for early stage investments, which for us is between 1 and 10 million. And then we have a growth team who do 10 to 25. And so I think what is unique is what we can offer entrepreneurs is just to go with them on their journey. So last year, actually, our smallest investment was 500K, so below 1 million, but 500K. The biggest one was almost 50 million. So it really shows our flexibility in providing capital to entrepreneurs.
Yeah, that breadth is really interesting. And rules are made to be broken, right?
Yeah, exactly.
You were on stage here at SuperVenture talking on the topic of, if I remember correctly, fiduciary duty, ESG, DEI, and something else. I forgot the last one. So if someone is listening in or watching this and didn't attend, what would you say are the highlights of that session?
Well, I'd say the whole concept of ESG and DEI has come under attack in the last couple of months. However, and I think parts of it are correctly under attack. I think parts around regulation and reporting and doing things which don't make sense. However, what you have to remember is always, as a venture capital firm, what you're doing is you're not interested in quick flips. You're helping entrepreneurs build large, sustainable companies, where you take all stakeholders into account. And some of our most successful companies, we also set up a continuation fund. We've been invested in over 10 years. So it's not about quick flips. And that means fundamentally building good companies, which take all stakeholders into perspectives into account, is what we've been doing the whole time. And ESG came up as a framework, maybe more on how to structure these conversations and these thoughts. And the pendulum in some cases maybe swung too far in a certain direction, and now it's going back towards the middle, which is good.
Yeah. These terms have even been quite politicized, to be honest, right? Do you think because of the macro, these topics will become less relevant for the industry? What are you feeling like? What do you think? And of course, I'm not talking from a macro political perspective. I think that's not our remit. That's not our mandate. I'm talking from a venture capital perspective, right? In terms of our industry, because as you said, the pendulum definitely swung a bit too far. Do you think we're going to see the reverse now? Do you think it's just stabilization?
I think it's an opportunity. And I mean, it's almost a bit cliche, right? I think venture capitalists always see opportunities everywhere. But I think it's an opportunity to build out impact and to fund companies and build companies which are per se good. So just using an example, I work with, again, Bio, a company in Copenhagen, who create base chemicals like acetone, acetic acid, etc., out of CO2. And the more, the bigger the business is, the more good they do. And sorry, I should have mentioned it's using CO2 instead of oil. And so on the one hand, it's good, it's green, but on the other hand, it's cheap and it's resilient and it's local supply chain, and we're turning waste into something useful. And so I think these are the examples of companies, which will continue to get funded no matter, where we stand on ESG. I think what was let out was a bit of the hot air, which was in the industry at some times.
Yeah. Are you how to put this in a nice way? So we just had a couple of recordings here where it talks about defense tech, right? And I think the same trend that put defense tech on the agenda is actually the trend that also affected the perspective on ESG DEI and so on and so forth. How do you think about these macro trends as an investor? And I will forbid you of saying we avoid hype, not because you don't, but because everyone says that. But just elaborate a bit on that. How do you perceive these macro trends?
Well, I think looking at trends is what we get paid to do. And especially being early on trends. And so I love hype, especially if we buy before the hype and then sell during the hype. Love it.
Preempt hype.
Exactly. Yeah, very good. So we get paid to preempt hype. And I could say, we started with deep tech. We invested, or HV first invested in ESA Aerospace, the rocket company, 5 years ago, when it was quite contrarian bet. About 1.5 years ago, we did our first defense related investments in quantum systems, a drone company. And so we get paid to kind of be before the hype. But I think especially ESG and defense are not contrarian in any way, because the G in ESG, often people think about ESG as like green, but the G is about governance also. And I think especially once we get into defense, but maybe also in some cases in AI, governance just becomes very, very important.
That's a good point. Yeah, very good point. Shifting topics a bit. So you're probably one of the most established VC firms in attendance at SuperVenture. I think it's fair to say that probably 80% are emerging managers, generally speaking. Do you have any advice for them?
First up, I have to say I have a huge amount of respect for anyone who builds up a VC or private equity franchise platform, no matter what you want to call it, because you're on the one hand hustling for deals, and hustling for deals is hyper competitive in the market. And then on the other hand, you're hustling for for LPs. And so in a way, you're building up a two-sided service business or marketplace at the same time. And you need a product market fit towards your LPs. To me, a fund is also a product, which you sell to LPs. And maybe your product is like, for us, it's large, established, generalist, pan-European. Maybe your product is a hyper-specialized, one-person, single GP. and it's different LPs you attract. And so what you're looking for is product market fit on that side. But then, of course, the entrepreneurs, and I mean, the best entrepreneurs can choose who gets to invest. You have to hustle and have product market fit there. So it's hard.
Yeah, it definitely is.
So I don't know what a good tip is.
Keep on going.
keep hustling. No, but I think what is interesting, and where I then often see people, don't want to say fail, but struggle, is, when I'd say the first fund is hard to raise, but it's doable, especially if you keep it small and focused and, have a good network, good track record. I think then deciding what to do for the second fund and the third one is where it's really hard, because you don't have a track record yet, unless you hit an early success. Maybe your portfolio, you had a few strikes against it early on, which is what happens. And then doubling down and getting LPs to invest in a potentially even larger fund than your first one. Fund, I'd say, from my experience, not experience, but view, explicitly not experience, I'd say fund 2 and 3 are the really hard ones.
Plus, you've tapped out your network in a way for fund 1.
Yeah, and your rich uncle's like, what's your TVPI? What's your DPI? No DPI, TVPI.
That's not a good deal. Do you have any? And this might be a very unfair question, but I'm going to ask it anyway. Some of our viewers and listeners might be on the other side, right? So more on the LP side here, and potentially maybe even new to venture. Do you have any perspectives that you'd like to share with people who are considering getting into venture but are, and probably rightfully so, a bit unsure, it's a very risky asset class, dispersion is high, everyone talks about diversification. What does that mean in venture? Does that mean that I should only invest in huge funds with huge portfolios? Does that mean that I should invest in a bunch of small funds with small portfolios? Do you have any words that you'd like to share?
Yeah, first up, this point about the risky asset class bothers me a little bit sometimes, because if you were investing in commercial real estate in the US in the last 4 or 5 years and saw your portfolio go down by 50% in this risky. Safe real estate class, it could be risky. How does public equities net of the Magnificent Seven look? Also tricky. And I fundamentally believe, and this is a bit self-serving, but I actually believe it also, is that especially if you're investing with a 5, 10, 15, 20-year horizon, I think technology is what will benefit always long-term, because it drives societal change and it's people adapting, to new things, new areas, etc. So fundamentally, the future is bright. However, venture, and that I agree with, is not an asset class where you should expect quick returns, quick cash flows, etc. That's fundamentally just not the point. And if I was a large asset manager, I'd look at what share of my obligations are on which timeline, and then match that. If I have pensions to pay today, I need cash. If I have pensions to pay in 25 years,
different conversation,
different issue, and then I think a part of it should be in technology.
Okay, I always wrap up these conversations with the same question, which is around biggest learnings. And I always preface it with not necessarily in the last year, but recently, right?
Okay.
So what have been some of your recent biggest learnings?
Interesting one. So maybe by context, I was an entrepreneur. I had 2 entrepreneurial journeys in my life before venture, and I thought I had developed a muscle on how to build a company, and I think especially when you enter venture capital, it can be quite humbling in the beginning. I've been doing VC now for 8 years, and slowly some successes are coming. In the beginning, you think entrepreneurship. You invest in companies. Some take a while and do well, but many also fail relatively quickly. And so from the high of having built 2 companies and having sold both of them, starting in venture was quite humbling, I have to say. Specifically more maybe about the last year and the deep tech investments I'm doing. I think what is important is to find businesses which are fundamentally really changing the industry. I see too many entrepreneurs who build something small in an industry where they have to work with partners, etc. I think you need a large target market and a large scale of ambition to then maybe pivot into a niche. But I think if you start out targeting something small, the likelihood of failing is high. And that's why an example of a company HV invested in NeuroRobotics, full-scale integrated hardware, software, own production, own supply chain. Everyone said focus, but the founder said, no, we need to own this top to bottom. And in the end, the market is proving him right.
Awesome. On that note, Jan, thank you for hosting us in your hometown. I guess it's your hometown, right?
Yes.
You're Berliner.
Yes, it is.
Thank you for hosting us here.
Well, you're always welcome.
It's been a pleasure. Thank you for ordering good weather for me. I appreciate that.
Well, as a Portuguese, I needed to roll out the sun.
Exactly. And I hope we can meet again next year here.
I'd appreciate that. Thank you.
Awesome.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.